Hello friends, in our previous sessions we saw some of the basic source documents that Daniel had just dumped in his bag. He also has a folder where he kept all his bank related documents. So as promised, today we are going to discuss all the bank documents that we come across in day-to-day business activities. Daniel has a few checks in here. Let us pull them out. Now this check here says pay to Daniel Traders or bearer. Then we have the amount in figures and in words. We have the account number and bank address of the payer, the account type, and the payer's name and signature. This check has the words or bearer. It means that the holder of the check can encash the check at the counter of the payer's bank. So Daniel has to take this to the payer's bank and he can get this encashed. This check is as good as cash. Now this other check here has the words or bearer struck off. So then this check is considered as an order check. An order check can be paid to the named payee, that is the receiver, across the bank counter if so presented. If it is an order check, then identification of the presenter must be insisted on by the bank. So the ID number and the named payee's signature will be asked for on the back of the check. So this means that the bank will make sure that the check goes to the payee. So that is the difference between the order check and the bearer check. Now this is a third type of check we have. It is crossed by two parallel lines. And this type of check is called as a cross check. A cross check is safer than order or bearer check as money cannot be encashed on the counter when check is presented. In this case, money is credited directly in the bank account of the payee. If there is nothing written between these parallel lines, then this check can be further endorsed to another person. Meaning, if Daniel has received a cross check, say of $500, and he needs to give $500 to his supplier Harry, then he will sign on the back of the check with Harry's name and account number, and then Harry will be able to present this check and get the amount credited in his bank account, even if his name was nowhere on the check. So a cross check with nothing written between the parallel lines can further be endorsed. Then this is the last type of check here. In between of the parallel lines in this check, we have the words account payee. Now this check is also crossed by two parallel lines, but the words account payee is mentioned in between the parallel lines, or it can also be represented by the words non-transferable. This kind of a cross check cannot be further endorsed. This means that if the check in the above example, which is in favor of Daniel Traders, bears account payee, then the payment can be collected only in Daniel's bank account. The paying bank makes sure that the amount is being credited to the account of the payee only. It is one of the safest checks and can also be couriered or posted without any problems. So now we've seen the differences between all these common types of checks. We have another document here, and this is a deposit slip. To deposit the cross check or any cash in his bank account, Daniel will need to fill out a deposit slip or a pay-in slip of his bank. A deposit slip indicates the date, the name of the depositor's account number, and amounts on checks or cash and coin that he is depositing. The bank clerk typically verifies the funds received against the amounts listed on the deposit slip. After filling up this form, this amount will be deposited in Daniel's account. And this one here is a withdrawal slip. Now, a withdrawal slip is a written order that you write to your bank instructing it to withdraw funds from your account. Withdrawal slips varies from bank to bank. Here, this is an example. To fill out a withdrawal slip, this is what has to be done. List the amount of money that you want to withdraw, sign the withdrawal slip, and take the slip to your bank. So all of these checks or withdrawal slip, bank deposits also serve as source documents. Let's see what else is in this folder. Here we have a note which says advice to the customer. Bank advice. A business account holder may have instructed their bank to pay out expenses of his business like bills, rent, electricity, interest, dividends, salaries directly every month from their bank account, or to collect the same type of incomes directly on his behalf and get it credited in his account. So this is a bank advice statement issued by the bank which informs the account holder that their account has been debited or credited. Here the bank carries out the transaction by itself and then notifies the account holder through this statement. And we have one last document here. This is a bank statement. A bank statement is a printed record of the balance in a bank account and the amounts that have been paid into it and withdrawn from it. It is generally issued periodically, monthly, quarterly, 6-monthly, to the account holder. Normally, a current account holder. Now, Daniel has a business, so he has a current account with his bank. Since a current account gives permission to make more withdrawals, it is more preferable over a savings account for businessmen. But generally, we as individuals have a saving bank account and we are issued a passbook instead of a bank statement. However, even savings account holders may ask or request for a bank statement and they may get one. So this was all that's in his bag. With this, we have come to an end to all the different types of bank documents. And now that we have all the source documents for this month of Daniel, we know the next step in this accounting process is recording them in a journal. So we will be learning how to do that in our next session. Do like the video, share your comments and subscribe for more such accounting videos.